Welcome, traders. I want to give a complete guide today to my quad rotation scalping strategy. It's going to be a step by step. This strategy is adopted from my years of experience, several different coaches, kind of combining different elements from each coach. But the main quad rotation strategy I want to call out that's day trading radio. John has been a great coach and strategist as far as this goes. This strategy works really, really well. It's the most confident I have ever felt in my years of trading, just because it works so well and the indicators are actually pretty clear. Even without an indicator, you can still see a lot of what's going on just by the very nature of the market, from the stochastics, the divergence, all of that. That's what DTR gets into a lot. Um, so credit where credit is due. I just want to start there. I have adopted his strategy a little bit, and I've made some modifications, but this is a super scalping strategy. Okay, I trade on the 1 minute time frame. Typically, I've been trading NQ. Today I'm NES for this demo. I think it's a little bit smoother as far as movement, especially these days. Currently, we're at new all-time highs, setting almost weekly. So when you're at new all-time highs, the market's a little bit more difficult to trade in. And that is one of the reasons that I've liked the 1 minute strategy as well, because even when the market is more volatile, you can still find these trades at all-time highs. This strategy works best within a ranging market, and 90% of the time, maybe a little bit less, markets are ranging. So even though we're at all-time highs, it's not constantly making an all-time high without a lot of consolidation in between. And if you think about consolidation on the 1 minute time frame, right, that's barely affecting the 5, 15, the 30. So we'll get into a little bit more of that, but just want to give you the reasons why I like the 1 minute charts. They do move quick as well. So I work full time and I'm in IT. I don't have a lot of time to trade during the day. So typically what I'm trying to do, I'm in the mountain time zone if you can't tell. This is 7:30 opening here, which is 9:30 New York time. So typically what I'm doing is I'm going into work and then a little bit early, and then I can trade maybe for an hour or two, and then I have my indicator that can tell me to come back to the charts if I didn't find that perfect trade. But that's what I'm typically doing: one, maybe two trades a day, and I'm out. And then at night I go back and I get to journaling. I talk about my emotions, all of that I went through. I do a little bit of that while I'm in the middle of the trade, but these trades honestly move so fast, you don't give much of a chance to journal those. Um, I don't like to. Part of this is more just my journey, that I wanna document here in video format, but I'm trying to fight the greed emotion as I've gained a lot of confidence in this strategy. It has made me turn a little bit greedy, and I just like to let trades run more, take more risk, things that I don't need to do, especially with this strategy because it's got such a good hit rate. It just isn't necessary. Just wait for another trade. Don't feel like you have to make two, three, 4 grand. By the way, I'm gonna just to give you a little bit of perspective of where I'm coming from on the trading scenario. I trade mostly prop firms, so Apex, Top One Futures, Tradeify, Take Profit, Trader, are kind of my go-tos. I used to trade a little bit more on Top Step, but I haven't liked some of the rule changes. Though I will say I love their platform. That's the Project X platform, and you can find that at Top One Futures. Top One Futures, got to give them a little bit of a shout out. Clay who started that company, Clay Hodges, it was my first coach when I got into trading a few years ago. So shout out to Clay. I have a lot of trust in them as a company and as them as people. They are just good, honest people. And that's rare to find in the prop firm industry. So just want to throw that shout out there. Not affiliated with them at all, but have to give them props. So I've got the chart loaded up here. I'm just going to walk through some paper trading to show you what this strategy looks like. Um, let's dive into it. So we're at the New York Open here at the 7:30. Call it 9:30 if you want. In fact, maybe I'll bump this so that this is less confusing here. We'll throw the New York on here so it looks more natural. Okay, as we get going here, I'll start to describe a little bit of what we look for in this strategy. I think it's going to be a little bit before we get to a trade opportunity anyway, although I should have looked a little bit closer. So let me kind of get into this and give you a lay of the land here. I have a single indicator. This is called my quad rotation indicator. It's my own custom indicator. You can do a lot of the things that I'm doing within here with any old indicator. So you can see I've got divergence lines being shown. I've got this set at a B grade, but I actually have in this custom indicator A grade to look only for an A grade setup, a B grade setup, or I can take it all the way down to the C. I'm going to leave it on B currently just to give you guys an idea of what this looks like, how it feels inside of a B grade. You're going to get a little bit more false positives, but I also think it will help to give you a better lay of the land. So I'm looking back, confirmation window is 10 bars there. And then I've got a divergence pivot look back of 3 bars. The overbought and oversold levels, these are my stochastics here that we're going to get into in a second. I've got those set at 78.22. Typically, DTR would give you an 80.20. It's somewhere in that range. So definitely the 78.22 again comes back to this B grade for me. And then I've got a signal cooldown just to reduce the noise. If I've taken a trade or if there was a good setup, I don't need another notification for at least the next 5 bars. I also have a filter in here that I can reduce down the noise so I'm not getting London session, Asian session notifications in here, right? If I'm not trading those sessions, and I do periodically trade them, but not typically. These are my support and resistance zones. So you can see those kind of drawn here. The red section is a resistance zone up there. I've got my own stochastic exit signals, inside of here. So as it takes a trade, it will actually indicate to you with an orange X, similar to this 9 EMA line coming through here, when you should be exiting. And then you get into the stochastics. So these are the stochastics, and the EMA again is what I'm using for a lot of this. I'll let you look at these a little bit, just so you get an idea of what they're set to. This stochastic here I've got as the 9.3. This one is a 14.3 on the second, a 44 on the third, and a 60-1 on this last stochastic. I also have this Volume Force Pro. It's just a good visual for me to watch volume. I'll get into that in a second. So that's my current indicator that I'm using. And again, I've got all of these different. I'm going to turn off my C grade. I'll leave the B on for now again, just for the current video. I think it'll help us a little bit. You can see that I've also got somewhere in here I can add the stop and take profit. This is based on dynamic bar movement, price action. So it actually plots that based on how much the market has been moving. Okay, so that's my indicator. Again, you can do a lot of that with any indicator. This here is a VWAP. Again, all inclusive is really what this indicator is. I didn't want to add so many indicators, so I've combined all of them together other than stochastics just because you need the visual for this strategy. So I've got my VWAP here. I've got my 9 EMA is the yellowish orange walking through the candles there. That is important. That becomes our pivot point for entry and usually can be an exit call as well. Any of these Ds that you see are actually divergence, bearish divergence up here at the top, and we had a bullish here in this lower low, right? Um, then you've got these green lines coming across. The green and red are actually the divergence coming from the previous place. That's to tell you, sorry, from the previous divergence. As you can see, it had a divergence here at 641. It's got another one at the top here at 841, and it plots that so that you know the trend that it's currently working with. Now, the green divergence didn't have anything to pivot off of just because of nothing up here, right? These two are connected, but this one up here is off in its own land. And then again, you've got your red zone is your resistance zone. Support zone down here is marked in green. So that gives you a little bit of an idea of what I've got going on as far as my indicators, okay? We're going to go ahead and start this up here at the start of the open. And let's see what we get, and I'll kind of talk you through what I'm looking for on the stochastics and entry. We're going to need to bring this volume down because now that it's actually opening, you can see how much volume is going to ramp up. So volume is a key factor for me. In fact, I'm going to stop this right here. This is interesting. This is probably not a trade I would normally take, but what I'm looking for in my strategy for entry is all of these stochastics, ideally all four. That's a true A setup, but a B setup is just three of these stochastics need to be into overbought or oversold territory. I'm going to zoom in here so you can see a little bit better. They need to be above this 80 line. Again, I told you it was 80-20 is typically what I look for, but I've got my indicator set to 78.22 right now. So 80 is that line that I'm looking for it to get overbought and look for it to start to rotate back over. And as it comes back down into that 80 range, it's going to have a tendency to pull the market down if all of these are all lined up simultaneously, okay? So if I've got at least three of these into that oversold territory and they're all three hooking down and I have volume, this is the other key factor here, and this is one of the reasons I wouldn't say this is quite a good trade, right? If I'm looking at this indicator and it says there was a buy signal here, well, yes, that's true. And you can see where it got that idea from because it bounced here, here, here. Looks really good. And I look for what I call an on-ramp as far as volume. On-ramp is up, off-ramp is down. I need at least three candles here on my Volume Force Pro indicator ramping up in volume to indicate to me that it's got momentum in its favor now and wants to start to move to this upside. So you can see I did have that on-ramp. It's a very clear on-ramp, an upward trend, if you will, in volume, and it's bullish volume, not bearish volume. As you see, we've got the flip here through the middle. So this indicator actually is requiring a divergence to happen currently within, I want to say it's 10 bars. If a divergence has happened within 10 bars, that can be a valid trade. And so even though my indicator would say the conditions were not met as far as this being oversold, that would have to be below the 20 line, all of them down here, to look for a buy entry, right? They would all need to be down here. Now this one technically was, I would say, here on this 40 stochastic. This is my 40 and 4, right? You can see how it looked like it was just into that oversold position, came down into the maybe touched 19, and then immediately ramped back up with that on ramp of the volume again. So good indicator there, but this is right at opening at 933. That would not be a valid trade for me for a myriad of reasons. We're going to let it run here, but hopefully that gives you a good concept and overview of what we're looking for. Now you can see these start to rotate over. And ideally, the other thing I look for, you can see my indicator here. I'm going to let this keep running. But you can see my indicator here did have a valid buy signal according to that strategy. And this was its exit signal. Now we've got a short coming. I'm going to pause this here really quick. Whoops. Was a little too late there. You can see how quickly that one fell. Typically what I'm looking for at the top is a little bit of consolidation. I don't like to draw these on here. I think it messes the chart. It makes it look messy. But really you're looking for breakouts of channels, right? You've got these channels here, and I don't need to get into the semantics of how to draw your channels. I don't think it needs to be that precise for this strategy. It's just a clear indicator that it was within this channel. This is the trend. It needs to break that trend before you want to enter and call a reversal of the market. That's really what we're doing here, right? I mentioned that it's based on range. It's a ranging strategy. We have our support and resistance zones. There's our support. There's our resistance. We're looking to trade within those zones and look for the reversal at the top of the resistance zone as these 4 stochastics are rolling over. And you can see that 3 out of 4 were rolling over there. It was very, very valid. But that was a very fast move. You're talking 10 minutes into the open. It's a very aggressive move. That wouldn't be a typical trade I would take. But now 2 that I wouldn't have taken, and you can see how my indicator has very clearly called them. But the next thing that I look for entry after making sure that we've had some consolidation here, so let's ideally say we've got a candle that it's gone here and here. We've got a lot more consolidation going on, right? As we come along here, it's still going to line up this same way where we have rolling over in overbought conditions on these stochastics. And the second candle now is breaking that 9 EMA and closes below that 9 EMA after holding the 9 EMA all the way up, right? It's the counter of what this trend has been. So once it breaks below that 9 EMA and it's not within this channel, I know I have a valid entry for a trade. This large down volume candle would have been my entry candle, and I wouldn't ever enter after a move like that, right? That's trying to catch the falling knife. So it did precisely call that. Again, not a trade I would have taken based on my own take. Okay, now we're playing off of this VWAP. I kind of wanted to see if it rejected off of that VWAP, but it doesn't look like it's going to. We're getting into some oversold territory here. Whoops. Yeah, well, in fact, we did have a valid entry here. I was gonna predict one because we're in that 950 zone where futures love to MES and MNQ love to reverse around that 950, 945 time frame. So This is interesting. I caught it a little bit later than I would have liked. I didn't want you guys to quite see that indicator there. But you've got your 1, 2, 3 stochastics all coming down below that 20 line into oversold territory. Then they're turning back up, making that U-turn, or even the best ones have a full-on V, and it's just a 90-degree angle where this thing just shoots straight back up. Maybe not quite a 90, probably more towards a 45, but you get the idea. Now, this last stochastic here on the 60, my personal preference here is that this be within the 20 range, just because when it's outside of it, you just don't know what kind of, really this stochastic here on the last stochastic, that's a 5-minute time frame. And you don't know what kind of trend you're fighting if it's in oversold territory on that 5-minute time frame. It's not something I really love to play with. I'd rather it be above the 20. I don't love that it's on the downslope that it is, because at the 5-minute, that means that could be the current trend, is that it wants to come down. Now we know from the last 5 minutes that's true, right? But that doesn't mean it's not ready to reverse like the other 3 time frames here are indicating on these stocks. Sorry, I'm going to shorten the stochastics for stocks. Okay. So this is an interesting one. I would have loved to have backed up maybe 1 bar, but my entry technically wouldn't be until we're back above that 9 EMA, which is this candle. And again, I'm going to, excuse me there, not sure what happened. Got too many computers logged into TradingView that compete with each other. Let me walk you through the last parameter here in my conditions. I don't love that time keeps getting in my way here, but what I have as far as this goes is an off ramp, right, or an on ramp, because it's coming off of the off ramp from the down to the up. Volume is swinging continually up, and it looks like it wants to flip from bearish volume to that other side, to the bullish volume here. It looks on this trend like it's also got the same hook that these 3 stochastics have. So that to me is valid entry. I'm going to go ahead and take a trade here, show you what this looks like. We'll throw 10 lots on it. It's MES instead of MNQ. So these are going to be a little bit more they're going to be a little bit more intentional about their moves, and probably, okay, sorry, thinking through this here. I've got this set at pretty much a 1-to-1 ratio. Typically, you could even tighten up this stop loss a little bit more, and here's why. If I have a break above the 9 EMA, I expect this strategy to work almost instantly as soon as I hit play on here. If it's not, that really is a clear indicator to me that I'm too early. I need to get out of that trade, and I might even close that trade, not let it hit the stop loss. I'm going to take that off the table at less of a stop and not let it come clear down. Just because that happens so often, and you need to get out and be ready for the next rotation. The reason I'm a little concerned about this trade, and I would call this more of a B setup than an A setup, is because we don't have that consolidation that I just mentioned, right? I'd love to see this one tick over before rolling down. Well, this one also didn't do it. That happens a lot in the New York Open. You kind of have to be okay with that risk. But they're more B setups, and the A setups tend to come a little bit later in the day, more like the 10 o'clock hour, 10, even noon. So let's see how this one works, if it starts immediately going in our favor or not. I'm going to slow this down a titch here so we can see it moving a little bit more slowly. All right, I might have slowed it down too much. Okay. So we've started working in our favor already. Again, I want to see this maintain the 9 EMA line. I don't want it to break back below that. It can, and look how much it broke against there. I'm going to let it run just because I think it's going to bounce back off of that VWAP. But that is an exhaustive move back down to the low side, and I now know that I got in too early. This is going to go up. It looked like it wanted to break that 9 EMA, but it's going to stop me out. It may even set a little bit of a lower low here before giving me that re-entry because I was just too early. Now you can see the difference in size of those triangles. That is my A plus setup triangle. So this indicator does a lot of the work for me. But I was about to call out, you can see we've got alignment here, now down all three stochastics, and this fourth looks like it's even starting more of an uptrend. We're still ramping up on the volume, and it's just a clear indicator it wants to push back off of the VWAP here. It's going to move to the upside, and you can call it to this resistance zone, or you can just kind of watch this stochastic, this top stochastic. A lot of times, if it's running out of steam and I get up near this 80 oversold level, that's my exit signal. But we'll see what the indicator gives me here. So we're going to enter again. And this time I'm going to get a little bit tighter stop. I already lost the 600. So we're going to watch my P&L down here and see how this does. That'd be $1,000 trade there if it's 10 lots and goes to the top of the range. I'm not sure I'm going to hold out for that, but let's see. Okay. Didn't really turn against me much, right? It's still actually holding that 9 EMA, which is interesting. And there you go. It takes off. Now, the scalping strategy I've kind of called out that can move really fast, I could take that 3 bars. In fact, before I see anything else, you can see that it pivoted off of this already once. Now that I kind of consider this, I know this isn't a true double bottom, so don't get confused, but this happens a lot when I'm looking for these entries. It's a slightly lower low, but I still consider it a double bottom, and that is such a key pivot point when trying to call reversals like this, right? The double bottom is an indication it has tested this level before. It tried to go a little bit lower, it failed again, and is now going to rotate back up. Not a ton of data to scroll back here and look at, but I do want to just kind of show you, I tend to look left a lot on these levels just to see how significant they are. If they've had pivot points off of them in the past, so right now I think our level was just about here, right? Was my entry because I'm already up 500. You can see it is a level that came back over here, it bounced off of multiple times, consolidated off of, and then bounced. Over here, same thing, touched in this zone. It's really not just a price level, it's a zone area, right? Resistance, rejected. Resistance, rejected. Resistance, rejected. And then it pushed through. So this is a significant level, especially if we're talking about a 1 minute time frame. We've got multiple touch points to already reference back. I'm going to go ahead and let this run because my volume is still not drying up. I still see an on-ramp going upward. So let's go ahead and let this run and see if we can get it to the top of that range. That may be a little aggressive. I don't like to get greedy. I'm trying to fight that urge a little bit, but it's definitely there. What I will do, I don't love how TradingView completely hides my P&L here. So imagine that is break even, just so that you can see. But a point still could be taken that you want this to remain above the 9 EMA. If it's going to break back below that in any significant way here in the next couple of minutes, yeah, let it stop me out. I can take a small profit. That's fine. But I am a little bit worried about this level just because, again, we see a pattern here. It has bounced off of this level. Now, it may just be a small pullback and then a push back through. So 1, 2, 3 pullback, it looks like, as long as it doesn't come back below that EMA. Now we're into some consolidation here where it's just not wanting to move. Okay, there we go. Yeah, now I expect it to go up to this range again. But I do want to be careful. I'm going to stop this here. I do want to be careful because I'm in overbought territory here, here. I'm nearing the top of the range here at the 80, and the 5-minute is even coming up into this range, currently sitting at 62, 63. So I'm going to let this run a little bit, but I am going to be watching my volume. If it starts to tick back down, I want out. I want to take my profits here. And I'm going to stop it there because my indicator says this is it. This is based on the bars previously and the range of these bars. It tells me to get out. So I'm actually going to go ahead and close my trade here, but I'll mark this line we were at and see. Let's just see if it goes to the top of the range. I guess we have this resistance zone, right? We know where that would be. It's slightly below that range. I'm at the 64.37. So let's go ahead and take this profit. One back a little bit after my first loss. I've got my X there. Let's see how it does. I want to let this run through. See if I closed a little bit early, but I feel fine about it. And look, I immediately get a reversal signal. Now, this is not an A+ setup, right? I don't have the divergence. I don't have a lot of things going for me, but you can see how it's already starting to hook down on the top 3 stochastics again, and I've got my ramp down on volume. So my indicator was 100% on point with that exit. Man, that was a fantastic exit signal. So that's my strategy in a nutshell. I wanted to share it with you. Hopefully that gives you an idea of my trading style. I'm going to use this as my go-to video for anyone to reference back to as future videos come out. It's all still based in this strategy, and you can see how it works so well and just helps you understand the dynamics of the market going on. It has opened my eyes to market movement much more than any other strategy has. Just the DNA of what's actually going on here. Yes, the VWAP is a big one. I've used that one a lot to help me know what to, where momentum is for sure. But I have noticed in other strategies that use the VWAP, by the time they're using it to pivot off of and say, okay, now I want in, yeah, you get a couple of bars, but that's usually when you're starting to get into a pullback. And it just made me more uncomfortable, more stressed as a trader. And so I couldn't keep my emotions in check. I'm big on emotions. I'm big on psychology. I think they're key to becoming a profitable trader. So there's my strategy. I'm going to leave it with you. Hopefully that was helpful. I will continue to push out more videos where I'm talking through trades, where I'm showing this strategy live. I can even drop a link in the description here for my indicator if you're interested, just because it's got so much going for it. But that's for my Patreon members. So if you're interested, let me know. Love to build a community around this type of strategy. Again, it's quick scalping. This shouldn't take, how long was that trade there? Maybe 15, 20 minutes. And that's peak for me. If I'm in the middle of work and I've got a meeting, likely do, at 10 o'clock, I might take this entry and I might just take the first three candles and call it a day. I do like to use lockout features in Project X as well so that I can't circle back and think, all right, I just need another one of those trades and I can make $1,000 today. That's where greed has really bitten me in the ass and just has, I've blown too many accounts doing that. So my lesson that I'm trying to instill in myself and maybe to anyone else out there, never let a green day turn into a red day. Even if you're green only $225, which by the way is not bad on a 50K account, that's typically what I'm shooting for. That is if I'm at the $200 to $400 mark, that is lockout territory. I've done fine for the day. I don't need more than that. And even that is really pushing it. You're at 0.5% per day. That would be fantastic money if I could make 0.5% per day. I'll leave it there and see you in the next one.